Bonjour.
Yeah. Thank you so much. Bonjour, François, and thank you so much for having us. And I think it's very fitting, actually, that we discuss this enigmatic phenomenon that took the world in such a stormy way, right in the middle of the museum in the world that keeps probably the most enigmatic painting, Mona Lisa. So thank you for having us in the Louvre. It's just perfect. So just 3 points that I wanted to share with you, which I keep thinking of in relation to crypto assets in general and the impact it has had. First of all, the evolution has been stormy. It went from this sort of cultural hype pushed by libertarians, promoted by Satoshi Nakamoto in his wisdom and total anonymity, to being this tool that is now accepted by the PayPal, Visa, and MasterCard of this world, and which has been abused by, whether it was Terra or Luna, but certainly Mr. Do Kwon, who is on the run, is the other side of that enigmatic coin, which warrants the regulation that has been advocated by both Jay and Ravi. Second, where evolution has been critically important, is this search for yield, which has clearly encouraged and accelerated the process at times when across the world we were in the lower bound and where interests to be earned were limited. And third, the world was caught by surprise. And from these regular statements that we all made that, oh, of course it was growing, but it wasn't systemic. Well, we are now at a stage where, between 10 and 15% of Europeans and Americans actually have invested in cryptos in 21. And where clearly regulators, consumer protection agencies, supervisors are now really attentive to developments. So those are three interesting aspects: this cultural evolution, the search for yield, and the world caught by surprise that I associate with the development of cryptos that I will go into further details in the second part of this session. François, thank you.
Very much to the four of you. By the way, a technical remark, there was some echo. I wonder if each of you can be on mute when you don't speak, but we could hear quite well. So we come to the second part about the responses by central banks to this landscape you presented to us, Agustin. Obviously, it calls into question an almost philosophical point, the relation along history between public and private money. And as all of you have said, it's a question of combining regulation and or innovation in our responses. So as I said, I suggest that our two prominent central bankers across the Atlantic, first Christine and then Jay, focus on their view on the topic. My understanding, and I say it with a smile, that, Christine, you intend to focus perhaps a bit more on innovation and CBDC, and Jay, you intend perhaps to focus a bit more on regulation. Perhaps people would have expected the US central banker to focus on innovation and the European one to focus on regulation, but at least it shows you that we are all on the same page of combining both. And Christine, if you agree, you start.
Okay, well, thank you so much, François. And very briefly, by way of introduction, the way it was, the disruption, and what we need to do, we central bankers, to stay ahead of the curve and be in the game. So the way it was and the way it is, in a way, is what you just alluded to, François. It's this combination of public and private money, public money being the matter for central banks, either cash for individuals or central bank deposits for banks, and private money, where commercial banks were the main player, making up around 85% of M1, and being innovative with new forms of payment, from giro payments to cards to any other things. And both of those, public and private money, actually complemented each other quite nicely. Then came the disruptors, and I could not agree more with Ravi about the distinction that we have to make when we analyze the way forward and the regulatory framework, where we have to distinguish between the crypto assets, the traditional Bitcoins, Ether of this world, and the stable coins. And where I totally agree with Ravi that the crypto assets, not currencies, but the crypto assets are obviously pure speculative assets. And I think that the movement that we have seen in the last 12 months is clear indication of the fact that it is indeed a speculative assets, and certainly not a means of payment, not a very stable store of value. That's one aspect. The second aspect, which is more promising, and I also agree with Ravi on that, is the whole sector of the stable coins, which only represent about 10% of the entire crypto universe. So it's very minimal for the moment, but it is promising as long as we don't have players that abuse the system, that pretend that they have liquid assets to back their stable coins, or that it's 1-for-1 when in fact it is not 1-for-1, and Terra is followed by Luna bankruptcy. So That is possibly disruptive, but it is, for the moment, as I said, only 10% of this crypto universe that we are talking about. But it has created, and it has probably accelerated the desire for more innovative ways of paying, more innovative ways of transacting. And as a result, digital payments are clearly in high demand. And this is more so in some countries, less so in others. Just to give you an example from Europe, in Sweden, for instance, there is virtually no cash transactions anymore because cash is not there. Whereas currently in Austria, there is a referendum to defeat a proposed regulation to request that payments be not in cash above 10,000 euros. Well, in Austria, they would like to be able to continue to pay more than 10,000 payments in cash. So there is great heterogeneity in the request, but we can see in the surveys that we have conducted that there is clearly an aspiration, a desire for digital payments, much more so than it was in the past, and this is growing. We are now, in the surveys that we've conducted across the 19 members of the Euro area, we have more than 50% of the respondents who say, we want digital payments. Well, less use of cash, demand for secure and riskless payments. Where do we stand? We central bankers, we have been operating as a monetary anchor in relation to the commercial banks and the private money. If we are not in that game, if we are not involved in experimenting, in innovating in terms of digital central bank money, we risk losing the role of anchor that we have played for many, many decades. And we have historical examples of period where the central bank monetary anchor was not there, and that precipitated crisis after crisis. That certainly was the case at the time of the free banking in the 19th century. Do we want to go back to those days? Probably not. I would say certainly not from our vantage point, as a result of which we have to respond to the demand for those digital payments in order to maintain the role of anchor that we have been playing regularly. So what have we done here in Europe and with the whole Euro system, including all the central banks that are members, including notably the Banque de France, which has been very active, but also Banca d'Italia, Bundesbank, and a few others, but certainly all around the ECB, we have decided early on to start experimenting discreetly and try to understand the concept, the preferences, the media that could be used, and the characteristics that should be presented by the digital euro, as we call it. We're not the only one. Back when I started as president of the ECB, there were about 30 central banks that were looking at it. As we speak now, and I have nothing to do with it, the BIS, I think, has done an inventory of who is doing what in the zoo, and there's more than 100 central banks that are currently looking at CBDCs and exploring what characteristics it should have. So for us, it's the digital euro project. We will decide in about a year's time whether we actually move into a additional phase and prepare the post-prototype phase. We are now currently in the prototype phase, and we're certainly not ahead of the game because PBOC in China is ahead of us and a few others, but we are not doing badly in terms of timetable, and we are sticking to it. What I would like to do, François, is just very briefly go through the characteristics that we see as important. First of all, it has to be a convenient medium of exchange, that it becomes part of everyday's life for the Europeans. Number two, and why is that? Because customers, Europeans who have been surveyed, have indicated that they want to be able to pay anywhere and expect instant, easy, and contactless payment, especially person-to-person payments. Second, it has to be a success. It is not a venture that you can go lukewarm. You have to be 100% sure that it will actually work. You cannot fail on that one. There are pitfalls, obviously, and if a digital euro is overused, for instance, as a form of investment, it could crowd out commercial bank deposits and affect credit intermediation in the economy. So while we talk about DeFi, which is disintermediation essentially, and finance determined by protocol, the way we are thinking about it includes actually intermediaries and makes sure that commercial banks are part of the system. We also believe that there should be well-designed safeguards that either would include limitations to the holdings or would include a sophisticated tiering system in terms of remuneration in order to prevent that the digital euro become a very attractive investment more than a mean of payment. We want appropriate pricing and distribution via payment service providers because, as I said, it's not something that would be done in abstract or without the intermediation of the commercial banks or other private parties, actually. But certainly the pricing should be right. And all of that is intended for the retail segment of the digital euro, which doesn't mean to say that it would exclude, quite to the contrary, actually, a wholesale settlement infrastructures that is often referred to as the wholesale CBDCs. Actually, that in a way exists already, although in maybe a preliminary and not sophisticated enough form, but certainly the wholesale CBDC must be explored, must be part and parcel of the overall system. And I know this is something that, Francois, you feel strongly about, as I do. And the settlement infrastructure on which we operate, which has a dimension of digital about it, needs to be significantly upgraded and needs to be made more digital than it is at the moment. And in that respect, if the counterparties, if the commercial banks with which we operate expect distributed ledger technology to be part of the improved infrastructure payment, then we should certainly be open to it and be prepared to endorse the digital ledger technology as part of this improved infrastructure mechanism. So well advanced on our way and moving into, as I said, prototype phase that would precede the decision by surveyed Europeans. The first concern that they had, in addition to the support to the digital euro, was privacy. Privacy is first and foremost on their mind when we develop the digital euro. In terms of anonymity, there would not be complete anonymity as there is with banknotes, for instance, but there would be a limited level of disclosure and certainly not at the central bank level.